Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today, we are going to be talking about the overall market, addressing what happened yesterday with the CPI print, and also why today is officially the day we get to see the aftershock effects of the FOMC meeting. So, with all that in mind, we have been talking about this FOMC meeting for a while, really kind of warning about this week in particular, because this is the week that determines quite a bit around this market's movements as well as what's happening next. The CPI report came out and it was literally 0.2%. 0.2% difference from what was actually expected. As you guys do see on the screen, yes, the CPI was about 7.1% versus the 7.3%. I'm sure that you guys are all aware of this by now. But one thing that I do want to address with this is just how minimal of a difference that actually is. But with that, we've seen a ton of movements. And it was movements into the resistance zone. So Blockchain Backer, which by the way, if you guys don't know who Blockchain Backer is, I highly suggest you go check out some of his videos. You could probably learn quite a bit from them. They're pretty great to really kind of look into and learn just a few things around market movements and such. But here we have some resistance zones. This is the 2-week range that shares a very interesting area of resistance, especially I don't want to say peak resistance because it's not peak resistance, but just a 2-week span resistance zone that a lot of these assets like Ethereum pumped right into. And here you guys have Ethereum, and this is on the 4-hour chart. You could see the area of resistance back here. And also, we even do see Bitcoin as well, pumping right into that same exact zone. It's very interesting. Both of these are right in that zone, and they are waiting to blast through it. They're waiting to break out of it. And what could be that major thing that makes them both push above this resistance zone? A bullish FOMC meeting. In the past, most of the FOMC meetings were kind of playing into the idea that they're going to just try to slow down on inflation and really kind of play the calm game. But what is going to happen during this FOMC meeting is going to give us a little bit of a view on the next major trajectory of this market. One thing that we have been addressing as well is the US dollar, which we will get to here in a second. But so far this week has been pretty exciting nonetheless. We've seen a ton of updates. We've seen a few updates around the FTX situation. We've seen updates around the macroeconomic zones, and it's played a perfect game of let's see how volatile this market could really become. Because although everything has been very exciting, we've seen extreme volatility yesterday. We've seen the Dow Jones print a 1-minute 700 plus candle on the CPI print on just a minimal difference. It's crazy to me that this was such a minimal difference, yet this market reacted like this. And just to give you guys a quick insight from TradingView, here you guys have the reaction of stocks, gold, Bitcoin, and even the euro after the CPI report. Like, this is insane to me. Absolutely insane to me. And after the fact that, we've seen the CPI report, things kind of cooled down. And yeah, we've seen the volatility kind of come back down to reality and start to drop a little bit. But nonetheless, things did look very, very exciting. One thing, though, that continues to slide is the US dollar. It continues to fall, and this has been one of the charts that I have been loving to watch closely for the past couple weeks, as you guys have known. And as you do see on the screen, I have my support zone labeled. This support zone was a crucial one, and look at what ended up happening. We broke right down below it. Now, I was expecting to get a test of this 50 weekly EMA at about roughly 105 and have a bounce off of it, which we kind of did. We came back up to test resistance. Well, it was more so support, but it's now resistance, and we rejected off of it perfectly. Now, one thing that I do want you guys to realize about this chart is that we are breaking through the 50 weekly EMA. This is the first time that we are trading under the 50 weekly EMA since going all the way back to September of 2021. The first time that we've seen us break down below this and things really kind of pick up within the risk on asset class was going back to June of 2020. From there, we went on a bull run in crypto. Now, I'm not saying that we're going to see the same exact thing, but I will say a big telltale sign of risk on assets going parabolic would be us breaking down below the 200 weekly EMA at 98. This is also, coincidentally, major support going all the way back to March of 2022. It's also support going all the way back to March of 2020. So us breaking down below this level will not only be breaking down below an EMA, but it will be also us breaking down below significant support. And this will be huge for crypto. And I just want to ask you guys a quick question. You guys could comment down below in the comments. If I showed you this chart, what are you doing? Because this is the dollar on the inverted chart. What are you doing here? Because this looks extremely bullish for the upside, aka the downside, because this is inverted. Check out the 3-day. The 3-day looks even more bullish. And let's invert this back. So look at the 3-day. It's perfectly trading against that support resistance now. This is crazy to me. And it looks almost like the next level is going to be the 618 fib level, which, just so that you guys have it back here, 101.8. This to me is the next level. And after that, it's the EMA. And this is going to be a perfect test for the US dollar. This will be testing the April of 2022 level. And if we break down below that, there's not enough, there's no support until like 97, 98. And after that, we're looking pretty low on the chart. We're looking at some maybe like 96, but this looks like it's going to continue to drop. The FOMC meeting today, currently by the time that this video goes live, it's going to go live at noon EST. The FOMC meeting is today at 2:30 p.m. EST. Just so that you guys are aware of this, here you guys have it, or ET, sorry. So 2:30 p.m. It's going to be on their website, federalreserve.gov, or it's also going to be on their YouTube channel at the youtube.com/Federal Reserve. Now, pay attention to this. I think that this is going to be very interesting. We'll most likely see a 50 BPS hike from the Fed, which I'm expecting. And we even do see over here from Blockchain BB. We have FOMC tomorrow, and this is another catalyst for a Santa rally. Hopefully 50 BPS hike. Don't see a reason to go for 75 BPS. And yes, we are definitely focused on this right now. A lot of altcoins, like even XRP, for an example, are kind of coiled up on the weekly. Like this is on the weekly chart. It's coiled up between major support and major resistance. And I'm telling you guys, a big event could push all of these assets into a major run. I mean, even XLM on the weekly. This thing looks almost bottomed out fully. Like this is crazy to me where we are at right now on we're actually retesting a demand zone from November of 2020 before we seen a breakout on XLM. What's some other assets? QNT. We've been watching QNT closely. Here you guys have it. It's been trailing on the 618 fib level at about 112. We are watching this one closely as well. It's coiled up. HBAR. HBAR has been one that a lot of people have been asking me about. HBAR looks almost bottomed out fully to me, in my opinion, as well. Looks like we could go a little bit lower down to these demand zones down here. Is there any need for it? Not really, but anything is possible. We are still watching a lot of things around the CPI though, because everyone is expecting us to see some major movement in this market right now, and they're expecting it like at any second. But I just want to bring everyone back down to earth. When we look at what the Fed is doing, they will most likely keep hiking until the Fed funds rate is greater than the CPI, as you guys do see. So today, currently, we see that the CPI is 7.10%, and we see that the Fed funds rate is about 4%. This needs to be greater than the CPI in order for the Fed to stop hiking. And very similar in the past, we've seen a few things happen with this. The past one was about December 19th of 2018. By the way, highly suggest everybody go back to that date and look at all of the charts and their reactions to once we seen that date initially being printed on the chart, because everything changed on 12/19/2018, and it basically printed in the bottom for the bear market, and from there on we started to go higher and higher and higher until the inevitable March of 2020, and then from there you guys already know the story. So with all of this, we're focused on a lot of things. In fact, Peter Schiff, who is a known bear, has actually said a few things around gold that's pretty bullish for crypto as well. We do see if 1 month of a lower than expected CPI is good news, why is the dollar tanking and gold is up $30? The reason is that a lower CPI gives the Fed an excuse to ease up on the inflation fight. That means even higher future inflation, which is bad for the dollar and good for gold. But guess what? Anything that's good for gold is also good for crypto, because when we look at the dollar going down, it's very, very bullish for risk on assets. That's why we have been focused on the dollar for so long, coming back down to some of these nice lower levels, because this could cause a catalyst event across the board for a lot of altcoins like XRP, XLM, HBAR, QNT to go parabolic. I've focused on the total, right? So I've said that we could go lower on the total. We don't need to. But one thing is certain, and we need to really be cautious here before anybody like FOMOs in or anything like that. One thing's clear to me. Everything is still at major resistance. We need to see a lot more volume in order to get pretty bullish on this market right now. Conditions around an FOMC meeting is always to sit on the sidelines and wait for the next major move. I let the news cool down a little bit, because right now everything is extremely volatile around a lot of these markets. But one thing that I have been paying attention to on the total is if we do go lower, we're coming back down to that $700 billion mark. I think that that is the last line of major support before things get a little bit rough around the altcoin market. And this is regarding the entire market as well. Like, we're sitting at about $828 billion in market cap. We are focused on what could happen next around this market. If we do come back down to test that 696 point almost $5 billion range, I would love to see a significant bounce off of that area and a regain of some of that major resistance. A big area of opportunity around the total is watching it break above $925 billion. No, it's not a psychological level, but it is a significant resistance zone that we have been playing against in terms of an EMA. It is the 20 weekly EMA. After that, we really kind of target the 200 and then the 50, which would be sitting at about like 104 trillion and 118 trillion. So that's the levels that I am watching for on the total. This does regard the entire industry, but things are looking pretty good around some of the economics. We know that the CPI print isn't the actual number, though. 7.1% inflation is really not realistic at all. When you go to the store, you could tell that things are a lot higher than 7.1%, but this is still very bullish for this industry, and it's very bullish for this market. And it's also great to see green for like the first time in a very, very long time. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on because I'm more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day, beautiful night. Wherever you guys are on this before this, been Nick. Peace out, guys.